let's focus in on a corporate voice. Well, Satin Creditcare has seen some recent bulk deals in the company. Brokerages also have been very upbeat. They believe there's going to be robust earnings and there are growth opportunities from the SFB conversion as well. We've got then Mr. H.P. Singh, Chairman Managing Director, Satin Creditcare, with us on the show. Welcome to Hot Stocks. Thank you so much for taking time out and joining in. I want to talk a little bit first up about the outlook for the MFI sector. Lots of top funds are interested in buying into your company, so outline your growth strategy as well.
So the sector looks pretty robust as of now. The sector has grown by about 80% from the last year. So FY15, the sector was about 30,000 crores overall. And FY16, it increased to about 50,000 crores, which shows the potential growth in terms of the business model as such. For us, we've given a guidance for this year of a growth of about 60% to about 5,000 crores. And we've also given a guidance on our profitability, which is going to be another 73% increase in our profitability for this year.
Okay, so looking fairly promising, but what's the strategy in place, Mr. Singh, in order to achieve the kind of growth that you've just spoken about?
For us, we are penetrating more into newer territories as well as getting deeper into the existing areas of ours. We work in about 16 states, and a major concentration of our states are held by 4 states, which is Uttar Pradesh, Bihar, Punjab, as well as Madhya Pradesh. More into newer states, so we've opened up our branches now in states like Gujarat, states like Maharashtra, Rajasthan. And for us, the growth strategy will come from opening up more branches over there, getting more traction into these branches, into these states moving forward.
Now, what kind of growth levels are you currently operating at, and what is the outlook on credit growth over the next 2 to 3 years?
For us, we've grown in the last 5 years on a compounded annual growth rate of about 80%. And the guidance which we've given for this year is about 60%. But if you look at the scenario completely for microfinance and literally a microfinance plus in all these states going ahead, the growth rate seems to be on an even keel according to this. If you look at, as what I said, the 80% growth rate has happened for the industry sector as such. What people talk about, it's still penetration levels which are still pretty low in a large number of states. So as we go further ahead in our journey of looking at microfinance into this sector over here, we feel that there is a growth pattern which will probably be in the same range as such for the next few years, in the next few years as such.
And what's the product mix at the moment, Mr. Singh, with microfinance and SME, etc.? Are there any plans to alter or change this mix over the next 1 to 2 years, or is it working well for you?
Well, it's working up till now. So we predominantly do the joint liability group model, which is a group model, and we fund women to do economic activity across these states. So joint liability group holds about 99% of our portfolio right now, and we would continue to look at that because this gives us a better portfolio quality across in the space where you work in. But we've just added SME Verticl in our space. It just started about a couple of months back. That will also be one of our key growth areas looking forward. So that we're able to even go beyond microfinance and get into microfinance, as I said, microfinance plus, which is the small medium sector and the micro sector as such. So this is MSME in its true spirit that is going to come in. So that is also going to be some part of our growth strategy.
And what is the outlook on your loan book ahead, and from where are you seeing the maximum contributions to your loan book?
For us, we raise funds from a lot of institutional investors like banks and financial institutions here from India and from across the world. We will continue to do so. We are also enabling a capital raise, which is going to be held through our board meeting. We have an enabling resolution of raising some capital for our growth, and we are able to leverage that capital for our further growth this year as well as for the years ahead.
And what is the outlook on your asset quality? Your gross and net NPA levels are at about 0.19 and 0.09 respectively for Q4. And that's some of the best that we're seeing in the industry. I think a lot of investors will want to know, is this asset quality sustainable, or are you going to see stress increasing over the next few quarters? And if you could just give us some sort of ballpark figures.
We've been consistent in our portfolio quality. If you look at the net NPAs across for the last 4-5 years, they've pretty much stood the test of time in standing where it stands right now, and we will continue to maintain this asset quality. One of the things which I would like to put forward is that as a business model, the joint liability group definitely holds a lot of advantages in terms of retail lending and in terms of their lending to that section of the society where they have been unbanked and credit has not been their forte. This is also a pure reason that the group model actually stands as a peer collateral as well as a social collateral moving forward, and that is probably one of the strengths of this business model, that in a group the portfolio quality definitely holds a lot of weight in terms of their quality as well as their credit worthiness, and that section of the society definitely has a lot to do with their credit worthiness and moving forward. So the asset quality definitely will be probably
talking all the time.
So do you think the next monetary policy statement would be by MPC?
I think we are putting out the structure of the MPC. Let's see how far it gets.
Okay. Is it possible that the next
Sorry.
Okay, there you have it. That is the word coming in from RBI Governor. Quick one at that. In fact, he's saying that he can't say currently if the next rate decision will be taken by MPC, but there was a meeting that was taken with the finance minister right now, and that was a routine one. So of routine nature right now, but remember, the government had cut the RBI shortlist to 4, and Raghuram Rajan was, according to officials on the Monetary Policy Committee search team. Let's get right back then to the management of Satin Creditcare. And a very important question from investors is that, what are your current capital needs? Are you looking at capital raising, and what mode will it be?
We have an enabling resolution in a board meeting which is going to be held in the later part of the day. The enabling resolution sorts out to be we are about to do a capital raise of about 250 crores, and that's what we are about to raise as part of our capital growth. And to leverage that for looking at growth for us in the next future, the next year going ahead, So we do have a board meeting, coming up today in the evening, where we are able to look at a capital raise.
And what is the mode? The route by which you will raise these funds?
We're looking at the. So we're looking at a QIP, or a qualified institutional placement, which is going to be how we are going to look at this capital raise.
All right. Let you go on that note. Thanks for joining in and giving us a view on how business has shaped up for the company as well as your capital raising plan. So fairly optimistic. That's the management of Satin Creditcare, 50% in the last 1 month. Let's go across then.